Hey guys, welcome back to another video. I hope you guys are having a great day. If you have been paying attention to the natural gas market in the last trading session, we did actually have a very significant pull and we're getting closer and closer to the $2 mark to test out the support. Now the US inflation is at 5%, the lowest it has been since 2021. The CPI data suggests when it just came out literally yesterday. And on the other end, how Russia and Ukraine war is turning natural gas into the new oil because everyone is fighting for it. Before we get into all of this, if you guys are here for the first time, you don't want to stay up to date with everything to do with natural gas, scroll down, tap the red subscribe button right there, slap a like on the video for the YouTube algorithm so that everybody can stay up to date with what is happening with natural gas. So we know yesterday the CPI data came out and all of the market actually reacted very strongly. If you have been paying attention to the US dollar, let's just say it dropped very significantly after this news dropped. So US annual inflation reduced to 5% last month. Official figures reveal the slowest pace of price increase since 2021. They first began to climb. Now March monthly consumer index, which measures the price of the goods and services, showed the rate easing off over the last year. What sort of impact is this going to have on a strong natural gas? Now you need to understand, if the inflation is slowing down, what does that mean? The price of most of the things should be a little bit lower than expected, because obviously the price is not supposed to increase at a rapid rate because it has been slowed down by inflation. Now the same thing would happen with natural gas. Not worrying about the fact that the price is already low, but because the CPI data came out to be lower, let's just say a lot of traders or also whales got a little fearful in the market and decided to close their positions. Now if they are the long position, it is obviously going to cause a negative impact on the price, and that is exactly what has happened. We have had a significant pull down, and that is because a lot of people got very fearful after the CPI data came out to be the lowest since 2021. And on the other end, Russia and Ukraine war is in process of resetting the energy sector, with natural gas turning into a global and interconnected market affected by the event that are far beyond its traditional physical scope, similar to some extent to what oil used to be for decades. So you guys know, in the past, most of the countries always have a big problem with oil, trying to make sure that they have enough oil compared to their competitors, and that is what is happening with natural gas now, because Russia is not providing it, and seeing that Russia is the second largest provider of natural gas to the whole world and one of the largest to the EU, it is obviously going to be really hard for the EU to survive. Yes, they're looking for alternates such as taking it from Norway, getting it from the US, getting it from Africa, but the amount that Russia can provide in such a short period of time is nowhere near as how much US can provide. So you need to understand, Russia, if they provide 10, US would be able to provide 4 to 5. That's the max. So it would be much harder for the EU to survive, and suggesting that they just barely scrape through in the 2022 and 2023 winter. 2023 and 2024 winter is going to be a little concerning. Can now be driven by anything across the world, from LNG cargo diversion in US to river drying up in China and tensions over in Taiwan. So right now, LNG is pretty much getting affected by the smallest things around the world, which is what they're talking about, exactly what oil has been doing for decades. And if we look at the price action, as you guys can see, we were finally back into a zone of where we will be going into a consolidation zone. And as I predicted, this was not going to last for a long time. Why? Because we're not seeing any sort of weather switch or anything like that. So this is not being impacted by something significant. This is just a little bit of a fake rebound. That's probably the best word to use without sounding too against the long traders, but the short traders are obviously going to be coming in, and it's very easy to see over here. You guys can see that the sell orders are clearly outweighing the buy orders. At one point, the buyers did try to push up the market when it did decide to drop, but From there, it decided to drop even harder as more traders were going into their short positions. Also, if we look at the RSI line, as you guys can see, again, it is getting back into the oversold zone, which I am not very surprised by. As I mentioned, there is not much driving factor to push up the price of natural gas, and you can see in the super trend as well, it is clearly switched back into a downtrend. Where do I think this downtrend will stop? Personally, I think it will break at least down to 100 before it makes a decision on what direction to take. Now, if it does decide to break all the way down here, it's obviously going to be the deciding point, as it will be going into a consolidation zone, and if it breaks below, it will most likely make it all the way down to $2. Personally, I am a little cautious. If you are a short trader, I reckon that you should be a little bit more careful in terms of your leverage trades. That's all I'm going to say. Another thing is Qatar gives China oil giant SKYCLOUDS share of the landmark natural gas field. Now, this is a big decision. You guys need to understand, Qatar's energy minister and the chief of Qatar Energy has called a signing milestone agreement and a new landmark for relations between Doha and Beijing. And this has also been confirmed by Bloomberg. As you guys can see, deal is the first time China is directly invested in Qatari gas, and SKYCLOUDS to take 5% stake in one train at Northfield East. So that means pretty much 5% stake is going to be equivalent of 8 million ton production complex, and obviously China would not want to sell that to someone else. They're going to be taking it for themselves. Now, why a clean energy transition is so important to G7 chair Japan. Now, Japan needs to import nearly everything from oil to gas, putting a clean energy transition at the core of domestic and foreign policy for this year of G7 developed nation. The reason they want to do that is they want to make sure that Japan wants to become the definition of how to make the world a better place, and Japan wants to boost hydrogen supply to 12 million tons annually by 2040 from 2 million tons now, agreed with the number of countries worldwide from Australia to Middle East on supply chain. So you guys know, on the 15th and 16th we will be having the G7 meeting, and Japan is trying to cut down on, you know, trying to make sure that the world is more sustainable, so stop investing in liquefied natural gas. That is what they're going to be putting forward, and let's see what that will have. I personally think that would have a very significant impact on the natural gas price. Now, natural gas features extra advanced lookout for favor. Natural gas further consolidation seemed the name of the game. Right now, you know, we've fallen below. If I reckon that we're gonna break below the support level we're sitting on right now, but if we can just bounce off the support level close to the 120, that would be the crucial point for us to make a decision. Personally, I'm really excited to see what sort of decision this will come out to be. Other than that, I hope you guys did enjoy today's video. If you did, drop a like on it. If you're new to the channel, don't want to stay up to date with everything, subscribe, and I will see you very soon. I'm out. Peace.